Hello everyone, welcome to this first installment of Q1 reports on the South Florida real estate market. So this one is focusing on the city of Miami and starting with a very macro basic data point, and that is median pricing. We're seeing all sorts of headlines in the news about median pricing falling in other cities and other areas. That is not the case in Miami or in South Florida in general. What we're seeing here is something I've been talking about for some time, and that is the inevitable leveling off around new post-COVID realities. So starting with the single family home market, what do we see? We saw actually a record high March. March median pricing for single family home in the city of Miami was $592,000 this March. That is actually a 7.6% increase year over last March. And in fact, the highest median pricing monthly recorded was at last October at just $500 more. So we're actually right at record highs for single family pricing. But if you look at the chart, it's leveling off. What is super important to note is that inventory remains very, very low. Overall inventory is down 47% versus pre-COVID, while median pricing is up 64% versus pre-COVID. There was a 12% year-over-year increase in inventory, but that data point itself needs to be broken down a little bit because sub-$1 million inventory is at lows. There's a slight increase in inventory past $1 million, but that increase is less than the percentage increase in transaction volume at higher prices. So what we're seeing is also a continuation of another pattern I've been talking about, which is the higher up you go in price, the higher multiples were outselling what happened pre-COVID. All right, if we look at the condo market, we're seeing a similar pattern. Median pricing in March was $395,000. That's 4.8% lower than it was year over year. However, it's 65.2% higher than it was pre-COVID. And again, nothing goes up forever. This is all part of that leveling off process around the new normal. Inventory remains 57.4% versus pre-COVID. If we look at sub-$1 million, inventory in the Miami condo market is 63.8%, almost 64% below where it was pre-COVID. So this is what we're seeing happening in our market. It's leveling off around new post-COVID realities. As I've been saying, inventory remains very low, and the pattern, that schism in the market of high-end performance versus lower price performance is remaining. Extremely low inventory, the lower you go in price, which makes sense because most homeowners have either locked in a lower interest rate or own their homes. And if they were to move, they would have to spend a lot more for a house because median pricing went up over 60% versus pre-COVID. And they would have to get a much higher rate on their loan, more expensive money. So people are really staying put the lower you go in price. And again, the higher you go in price in our market, the higher percentage it is all cash and, perhaps less affected by interest rates. So that's what's going on. Stay tuned. And again, I'm going to emphasize the higher you go in price in our market, the more it is outperforming pre-COVID realities. We're transacting at multiples of pre-COVID realities in terms of transaction volume, the higher up you go in price, and the general market is leveling off, inventory remains suppressed, and this new post-COVID reality is emerging. And again, there's all sorts of data showing that the flow of wealth and talent to our market has just begun. Miami's ascension has just begun. Momentum is real, and trends in motion tend to stay in motion. The wealth and talent migration is very, very real. Stay tuned, everyone. More Q1.